Canopy Growth seeing its stock soar today, and apparently the catalyst, look at that, up almost 60%. Apparently the catalyst is that Germany is moving to partially legalize personal use cannabis. Canopy is one of the top 3 big medical producers in Germany. The CEO says this is a long overdue step to decriminalize the drug in that country. We're joined now by David Klein, CEO of Canopy Growth. David, investors like this news, so remind us, what are you actually doing in Germany right now?
So in Germany, we're already the number 3 player, primarily in the medical markets in Germany. And with this new legislation, what it really does is it makes for easier access to medical cannabis. They allow for some home grow, and they've also approved a concept called social clubs for cannabis growing in Germany. But we think that it's going to take the market from a little bit less than a $500 million market to over a $2.5 billion market over the next 2 years. And most of that volume is going to come through the medical and pharmacy channels where our business is very strong.
These clubs are interesting. I think they used to have something along these lines in BC, a quasi-legal way whereby people could use cannabis. So how will that work? Can you give us a broad outline?
Yeah, for a limited number of people, they can participate in each social club. So the social clubs are capped. It's a not-for-profit sort of activity set. It's just a way for people that are connoisseurs of cannabis can spend time working together. As I said, however, though, most of the revenue is going to come through the medical channel, which is where you'll see the commercial benefit for Canopy and others.
Germany, a big wealthy country, it had a population north of 83 million in 2021. So you hope this is going to be a serious market for you?
Yeah. We think that the market has the ability to grow 10x over the next several years. And if you think about what we've done at Canopy over the past few years, we've reset our business so that we could profitably take advantage of these sorts of opportunities as we get regulatory unlocks, whether it's in Germany or the US, and maybe even some progress in Canada.
Just looking, and just remind us, where else in Europe are you active? Can you give us a quick summary?
Yeah, in our business, so our primary focus of our business is on North America, so the U.S. and Canada, and then we also have operations in Germany, from which we service Poland and Czech Republic, and then we also service Australia and New Zealand out of our Canadian operations as well.
Investors apparently are pinning hopes on your operations outside Canada. I know that Owen Bennett of Jefferies arguing in late February that the vast bulk of your value is in the US operations now.
Yeah, that's correct. So our U.S. operations, which include some really highly regarded brands like Wana and Jetty Vape brand, the Jetty Vape brand. We also have operations in New York, New Jersey, Pennsylvania, Ohio, Illinois. Really populous states that are either allowing for adult use or it's on the near-term horizon to allow for adult use. So yeah, we're really excited about what that business can bring to us, and the prospects of regulatory reform or rescheduling of cannabis in the U.S., which would have an immediate and significant cash flow benefit for our U.S. businesses.
Jefferies argues that you've just been struggling in Canada. Now, I know it gets complex, but you have this listing that is based on the Canadian business. And Jefferies says, sure, the position has improved, but bankruptcy or insolvency is still a risk for the Canadian operations. And that obviously would complicate things for you remaining a public company. Can you comment on that?
Yeah, so our Canadian business has put together a few quarters of growth. We did a lot of work to resize our business over the last few years. Our operations now are fitting for the business we have in Canada. We've been able to generate profitability out of our Canadian business unit for the last couple of quarters. So we think we're well positioned in the Canadian market as our base, and then we can use that base in Canada to take advantage of the opportunity in the U.S. and in Europe.
How far away are you from profitability on a net basis?
Yeah, we're close. We've said before publicly that we would be profitable as we exit this year, and and our fiscal year, by the way, ends in March. And we're feeling good about being able to drive to that profitability number. So yeah, I think the hard work that Canopy put in is paying off now.
And just remind us then, you referred to Wana is an edibles brand, and then you have a conditional ownership of MSO acreage. I know it's a complicated structure, but are those actually earning profits for you in the United States right now, those brands?
Yeah. The U.S., our U.S., what we refer to as Canopy USA, is in aggregate profitable. The business is fairly healthy. It positioned really well in strong markets, and We haven't been able to really show that benefit to investors while we await for our shareholder vote, which allows for us to actually take over those businesses in the U.S. That shareholder vote takes place on April 12th. So we're getting very close to being able to be very public about what our business is in the U.S., and it's quite an attractive story.
Yeah, I know it gets complicated, but so you haven't been able to provide full disclosure of your results from America pending this vote?
Correct. And that will resolve itself. We think it makes our story easier for investors to understand, and it does prove out the trajectory and the profitability that's available to our company as we go forward.
David.